Hey everyone, welcome back to the channel. Feel free to like the video and subscribe the channel for instant updates, share with your community, and click the bell. In today's video, we will dive into what to expect from the US Federal Reserve's highly anticipated meeting on Wednesday, September 18th. This meeting could greatly impact the economy, the stock market, and your finances. So you won't want to miss this breakdown. Let's get started. So, why is this particular meeting so important? Well, the Federal Open Market Committee, or FOMC, meets to discuss the direction of US monetary policy, and the big question on everyone's mind is, will they raise interest rates again or hold steady? The Fed has been on an aggressive rate hiking path over the past year to tame inflation, which is still running above its 2% target. The Fed's actions are crucial because they directly influence borrowing costs, credit availability, and the overall direction of the economy. We've already seen the effects on mortgage rates, credit card interest, and corporate borrowing. Now, let's talk about market expectations. Analysts and investors have been closely watching economic indicators like inflation, job growth, and wage data to predict what the Fed might do. Currently, the market is somewhat divided. According to recent surveys, some analysts expect the Fed to pause rate hikes after a series of increases, citing concerns about slowing economic growth and cooling inflation. Others believe the Fed could deliver another small rate hike to ensure inflation continues to trend downward and doesn't resurge. Recent inflation data, with the CPI, or Consumer Price Index, rising at X% year-on-year, suggests that inflation is still a concern. But there are signs that price pressures are starting to ease. So, what data is the Fed looking at to make their decision? Here are the key metrics that will likely shape their next move. Inflation. The most recent CPI and PCE data are crucial. While inflation has come down from its peak, it's still above the Fed's 2% target, especially in core categories like housing and services. Labor market unemployment remains at a historic low of X%, and job creation has been robust, but wage growth has slowed. The Fed will want to see whether the labor market cools enough to ease inflationary pressures without triggering a recession. Economic growth. Recent GDP figures show that the economy is still growing, but at a slower pace. The Fed doesn't want to raise rates too much and risk stalling economic growth. The balance between fighting inflation and sustaining growth is delicate, and the Fed's decision could be influenced by whether they feel inflation is truly under control. So, what does the Fed's decision mean for you? Let's break it down. If the Fed raises rates again, we can expect higher borrowing costs across the board. Mortgage rates, credit card interest, and personal loans could all become more expensive. This would also tighten corporate borrowing, which could slow down business investments. If the Fed pauses rate hikes, it could signal that inflation is under control, and we might see stabilization in borrowing costs. However, the Fed could keep rates higher for longer to ensure inflation doesn't return, so consumers shouldn't expect lower interest rates anytime soon. Either way, the Fed's decision will have ripple effects across the economy, from housing to stocks and bonds. Segment 5. The Fed's forward guidance. Aside from the rate decision, another key element to watch will be the Fed's forward guidance. Fed Chair Jerome Powell will hold a press conference after the meeting where he'll outline the Fed's outlook for the coming months. Investors will be listening closely for any hints on whether the Fed expects to continue raising rates or hold steady for an extended period. Powell's tone will be crucial, whether it's more hawkish, favoring more rate hikes, or dovish, indicating a pause or cut in rates. Segment 6. Impact on the stock market and investments. Let's talk about the potential impact on the stock market and your investments. Interest rate decisions play a huge role in how equity and bond markets react. For the stock market, if the Fed signals a pause in rate hikes, we could see a positive reaction, particularly in sectors like technology, which are sensitive to borrowing costs. On the other hand, If the Fed suggests more hikes are on the way, it could put downward pressure on stocks. For bonds, higher interest rates typically lead to higher bond yields, but also lower bond prices. Investors looking for safer investments may find treasuries more attractive in a rising rate environment. For the US dollar, interest rate decisions also affect the strength of the US dollar. Higher rates often lead to a stronger dollar, which impacts exports and international trade. It's important to keep a diversified portfolio to navigate the uncertainty that comes with Fed rate decisions. Segment 7. What to watch for on Wednesday. So, what should you be watching for on Wednesday, September 18th? The rate decision itself. Will the Fed raise rates or hold steady? The Fed's statement. Look for any changes in language around inflation, employment, and the economic outlook. Jerome Powell's press conference. This will give us the clearest picture of what the Fed is thinking about future rate moves and how confident they are in their current strategy. Make sure to mark your calendar. The Fed's decision will be announced at 2 p.m. Eastern Time, followed by Powell's press conference shortly after. Segment 8. Conclusion and final thoughts. In summary, the September 18th FOMC meeting is shaping up to be a pivotal moment for the US economy. Whether the Fed decides to raise rates or hold steady, the implications will be significant for consumers, investors, and the overall market. Be sure to stay informed and consider how this decision might impact your personal finances and investment strategy. If you found this video helpful, please like, share, and subscribe for more in-depth market analysis. And don't forget to hit the bell icon to get notified about all our latest updates.